Today we are gonna make a recap on this previous move of Euro USD. This previous week, as you see below here, it is Monday 6 January to Friday 10th. That's 1 week from here to here. That's a 1 week period. So I want us to make a recap on the moves you could get here in this 1 week. As you see here, it's one trade, even though there are many scalpers, there are many swing traders, position traders, I think, who are playing from here. But obviously this was one move of this week. This week had one trade. So quickly, right away, let's make a recap on the way you could trade this trade. Let me delete all these drawings apart from those ones labeling the week we are going to trade. So assume all this data is not here. This one, it's a blank space. Just assume as if this one is a blank space, starting from here on 60 to this side of 10. Okay, so before the week we are going to trade, what was the previous week doing? We start from H4, then we shall drop down to the S1 time frame of H4, which is 30-minute, and another time frame we can still scale down from H4 to M30. It's M5 to find the liquidity engineering, as I told you in those previous videos. So as you well know, our strategy is mostly based on V-shape or VV analysis. Okay, this is the V shape. As you see, we display, meaning that you have to come back to pick entries from here or here, depending on the market movement. We get entries, we drop to this low. Okay, let's go right away. So before our week, can someone witness for me a V shape somewhere? As you see, can someone do it for me? I hope you can see it. Even though it's not clear, but someone can see it. Okay, I think you're seeing, guys, that this is the V shape to this side down, meaning that you have to come back in these areas to pick the entry. We sell it back below to this level. I think you can witness, guys. I think you can witness. Okay, so as you well know, this is our VV of H4 we are going to use. So we shall label this high, as you were seeing in those previous videos. And where are we going to label again if this one is finished? If you can recall, where are we going to label? Yes, this low. The ones we label, that point, display. These vertical points, are the ones we label, for those who remember from the previous videos. Man, let's go. So we have finished getting our highs and lows of H4. I told you what is the S1 time frame of H4. Yes, it's M30. Let's dive deep into M30. And what are we looking in M30 for? First, we are going to look for liquidity engineering. Let me draw for you a simple structure here, labeling liquidity engineering. The market dropped, made a low, it made a high, it made a low, it shifted. Should I call it a transition? Okay, it shifted. So let me first stop from here. So if a market does like this, it has shifted from here. It has shifted from here. So if a market does like this is a market shift already. You can see the market was trending below. It was trending below. The market was trending below. Yes, let us do like that. The market was trending below, and the market did for us a shift here. So before this shift, you look for me the last low they made. It is this one. So if this is the last low they made, you look for the previous one before this one, the one which is last made. You first find the one which was last made, you find the previous one before that one which was last made, meaning it is supposed to be this one. Okay, this one was the last one. You first look for this one, then you look for the previous one before creating this one. It is this one. Low, high, low, shifting. Meaning that if this market is to come back for entries on our liquidity engineering, the market has to come back here on this low. Tapping here, it can go somehow deeper, but you have to get the entries from here exactly. Your TPs will be above, because this structure is for trending up or upside. Okay, so that was a simple recap about liquidity engineering. Same as towards over bearish. Let me see if it can do it for us here. Yeah, bearish, as you can see, still bearish. Come back for entries. Yeah, the last high, you look for the previous high which was made before this one. It is here. So meaning that your entry points has to be here. Your entry points, your stop loss have to be above this last high. Your entry is here, TP is below. Okay, yeah, let's dive deeper. I think I can delete all this work for clear view. Okay, what is the use of this one now? I don't think this one has a use here. Okay, I'll use. Okay, let me see. Are we seeing any liquidity engineering here? Remember in M30? No. Low has no liquidity. What of this high? Does the high have any liquidity? Yes. Now this one is kind of tricky. Why? Someone would have labeled this one. Yeah, it's kinda true, but you look at this. The market did this. It shifted down, did this. Shifted down, it did this. It broke. So my liquidity engineering, as you see, this is the last high. Where's the previous high which was broken? Someone might say this one. Kinda correct, but for me I would have gone with this one. I wait for this one. We shift down, because already we have already got this shift from here. Yeah, so meaning that I will focus on this one and this high above. Okay, so what did the market do then? This one I'm already doing it before my week, okay? Meaning that in my week, I have to wait for the market to reach this point. I don't have to take any trade before my week, or in the week I'm going to trade before the market reaches this point. Okay, because these are the points where I'm supposed to take entries from. You can take entries right away when the market reaches here, because we have already defined our liquidity entries here, stop loss above. But the problem is that most of you would see as this is a big stop loss space, that one. So some of you might want to refine down to M5, because we are supposed to scale down from H4, M30 to M5, as I shown you previously in the AUD USD trade that we took last time. Okay, so let us see in our week. Remember now our week has started from here. Already on Monday the market reached there, on the same Monday. So one could have got his entry from there, stop loss above, TP is below, below there. Let me make it a black one, and below there. So this was our entry. I will also make it a black one for easy identification. So remember our TP here and here. I will put it here in the middle, but for me I will put it here because that was my target, because we had NFP in this move, or in this week. This week had NFP, so I was cautious, the reactions of NFP. Okay, so if I placed my trades from here already on the liquidity engineering of 30 minutes, I would have been already placed inside in the market, or I would have been in the trade already. But when you look in this M30, I see another shift. Can you see it? Yes, it's here. High, low, high, a shift. Meaning that we have to come back here for entries. We sell down. Okay, so just label it right away. This was our last high. This one was our area of shifting. Okay, so if that was our area of shifting, I will just label it like this. Then where are we supposed to get the engineering of liquidity? This is our last high on the previous one. Where's the last previous high before this one? It is this one. Okay, it is this one already. So let us calculate now the pips there, because I think we might get some entries there again. For those ones who never wanted to take this big one, you could have waited for this one. Let us see the pips above here for the stop loss, because the stop loss gives us the let me see, it is 18. Yeah, someone could have, yeah, this one is not so big. You can take this one. So meaning that you have to wait for the market to come back in this place still for second entries, or those ones who never took the first entry. Still the TP has to be below. So let us see how the market reacted. How did it react? This one, yeah, the market came there. I saw what he did here above. It was in playing in the zone, the red zone. So what happened? Did they hit the stop? Or did they hit the TP? Let us see. It started dropping. The first one and the second one, as you can see, the market started dropping. The market started dropping. Oh, wow. Both entries, the TP was hit. The first one and the second one. But look at the risk to reward, people. First, look at the risk to reward. 18 pips of stop loss above. You look downside, 172. Pips below. The risk to reward ratio is 9.4. Nice trade. Someone could have took these two entries in the previous week, or this last week we are from, or you could have took this one and avoided yourself over trading every day looking for trades. Yeah, this strategy is kind of for swing traders if you use higher time frames, but you can still use lower time frames as long as you know how to use the time frames properly. As I told you, M30, M5, H4, M30, M5, you understand. M15 you scale down to H1. You have to get your constant time frames and the S1 time frames. You can watch the previous video over the first one, which was BTC USD. No, it was AUD USD. Yeah, I illustrated that that work there. But I'm gonna make another video mostly explaining about time frames and the way you use those time frames, the constant time frames, and the situation time frames, those S1 time frames, the way they coordinate. As you see, we can use one time frame to get liquidity, the other one use it to get highs and lows. So it's not a big deal. It was a nice entry. As you see, back to our H4 used to analyze the highs and lows. Super entry. Wow, the way it shifted downside. So nice time, guys. This is before I close up, I wanted to do something here, but yeah, it's kind of refusing. So okay, I will do it in the next video. I don't know why my instruments are freezing. So thank you. Like an XA Uganda.